Hold on, Jules. Come here. Come up here. There you go. What was the other one? Oh.
Taking a look at the market outlook for today's session, stocks and bonds fell as data showing US business activity accelerating amid an increase in inflation-fueled speculation that the Federal Reserve will remain on hold. The S&P 500 fell below to 5,300, with all mega caps falling except Nvidia. The giant chipmaker surged more than 9% on a positive outlook, surpassing the historic $1,000 mark. The Dow Jones Industrial Average fell 1.5%, led by a drop in Boeing, which said it will continue to burn cash this quarter and throughout the year. Treasury yields rose, led by shorter maturities. Swaps now fully price in a full quarter-point rate cut in December compared to November a day ago. This month saw the fastest growth in service provider activity in a year, while manufacturing output increased at a fast rate. Such resilience makes it
SPNT naming a new CFO.
which explains why the Fed intends to
Sure, Pop November Tango.
for longer. Treasury 2-year yield rose 6 basis points to 4.93%. The dollar edged higher. Bitcoin fell more than 4%. Oil and gold have retreated.
What's up? How's everybody doing? I think was there anything else I want to show you guys? Let me see. Uh, oh, this one. Here, hold on. What's up? What's up, everybody? I mean, everybody on this end here. All right. Deck. Oh, let's see. Let me get a couple things off this chart too. Wow. Split? Still? Or no split? New highs. Unbelievable. Stock nobody talks about ever. Unbelievable. What they report, I'm scared to ask. What was the number? 30 bucks? Yo, they reported 15 bucks last quarter. I mean, what do they do over there, this company? Their numbers are insane. Let me see Deck. Hold on. Deck. Oh, they reported 5 bucks. They were looking for $2.80. $2.80, and they basically almost doubled it. I mean, look at this quarter. The last quarter, they reported 15 bucks. They were looking for 11. This thing is a machine. An absolute machine. All right, let's talk some market here. I can't stay on all day, so around 5-ish, 5:15, I got to run. But, all right, let's start off with this, right? We came off a couple of weeks there where, the speculative juices were flowing. We were seeing, and I start with call sweeper activity because as we were dealing with earnings and some other stuff, you had OPEX and a lot of other things that got in the way of flow. There's been just a lack of risk appetite from sweepers, right? A lack of risk appetite, especially in anything new. That's been a big problem for this bull market periods of times. Some better than others, but that's been a big, frustrating issue. We've been talking about a lot on these webinars, right? A lack of buying of new names from sweeper activity, a lack of discovery of new names. So we had to deal with a period of time again of that, and earning season usually you deal with that, right, where the flow wasn't really can't be trusted on, right, not a lot of clarity there. And then we had, as you well know, we started to see some GameStop activity. If you remember, we were cracking jokes. Sil was trolling me to death for a couple weeks because of that lack of new idea being generated from sweeper activity. GameStop, the sweeper activity in that name stood out like a sore thumb because it was one of the few names that was seeing some clean, aggressive call buying. And if you remember, we were all cracking jokes about it, talking about that's how bad the flow has been. Little did we know that that was going to lead to Kitty Cat posting nonstop videos that apparently gets everybody excited. I still can't figure out why. Um, and a week of strong speculative risk appetite in a lot of heavily shorted issues, right? And when you get that, that brings with it, hot retail sentiment. Okay, so I think that kind of almost was a distraction to what we were dealing with prior to that. A lack of new ideas and some of the same names, the quality names being the focus of attention. So that kind of gave us a 2 weeks of playing some other stuff, right? Playing some names that could be squeezed that were heavily shorted because that's what they were coming after. And I think now what we're dealing with, aside from NVIDIA numbers, but now what we're dealing with, I think we're dealing with some of the same issues we were dealing with before that kitty cat GameStop little era for a couple of weeks. And the reason I think we're dealing with that is a lot of the stuff that, again, it's been a problem in this bull market, but when we do get some consolidation or quick corrections, okay, uh, it cleans up the action, right? Even the flow looks better coming off those washouts or that consolidation. And then when a market gets a bit stretched, it brings with it a lot of repeat call activity in the same names, right? So if you're dealing with a problem of a lack of new names after a rally runs its course, and they hit every sector, you kind of run out of new ideas. Okay. And, for me, I told you guys, it's cost me money without a doubt in this bull market, but over the course of my career, that's been a seatbelt for me. It's kept me out of trouble. Okay. Again, for those of you who weren't here for the conversation, when sweepers aren't buying anything new and we're just seeing repeat activity and rolling in the same names, okay, that's been a sign for me to sit on my hands and do nothing, right? It's almost like a caution flag for me when you see a lack of new names catching action. And I've been able, that's how I've been able to avoid getting caught, holding bags in a rinse off a rally that, again, has been extended and a lot of the stuff has already hatched. Okay. This bull market has been different than a lot of the bull markets we're familiar with because this bull market's been about a lot of the same names and crowding positioning into these names. So where I usually avoid getting caught holding a bag from that signal off a sweeper activity, these same names have continued to rally, right? There's no sellers in a lot of these mega cap names. Now they're seeing a tougher time because they're a lot more crowded, but over the prior year or two, it's been different. Okay. So we are dealing with that now. Okay. And just look across the board, right? And I don't want to get too wonky with you guys, but we looked at, like, for example, those of you who are familiar or in the steam room or on these webinars, you hear me mention that DeMark exhaustion signal of upside and downside Niners, right? In simple terms, just a signal of potential exhaustion, and obviously a better risk reward will come on off a downside exhaustion signal than an upside, right? So you want to try to avoid putting on new risk into an upside exhaustion signal. Not that the stock has to crater from there, but on a risk reward basis, and that's how you should look at this whole game. It's obviously a lot worse of a risk reward as far as long entries. We were seeing a lot of upside Niners across the board. Okay. So a lot of times when you come out of a little correction like we have in the market, and you can call this a pullback or a correction, some of the leaders, the names that have been leading the bullish times, they're the first to rally, right? Then you'll start to see money rotate into other groups. And we've been seeing that, right? We saw the financials do really well. Commodity names heated up. Even the gold miners and gold exploded. But it got to a point where all of these things, now everything across the board, was up too much too quick, right? And we started to see upside niners in you name it. Even the overall markets. Here's ES, all right? And you can see the 9 there with some red bars here, right? Signaling again, things are just too stretched. Gold, which has been incredible. Okay, very similar here, right? 9, and you get a little break, right? And as these rallies get longer in the tooth, you get these pauses off niner. That's totally normal. Even if the bull market in these things are still alive, right? You're going to get some sort of consolidation, some sort of breather, okay? And that's what we were seeing, across the board, The banks, upside niner, right? So usually we've been able to benefit off rotation. And that's, in other words, we would use that to our advantage. Even though the market or certain parts of the market needed to breathe, you can look to other areas for rotation and try to make money on the long side there. I think the issue we're dealing with coming into this week is there's not many areas left. Right? We even saw the GameStops and the heavily shorted names of the world rip hard. So I think I started off the webinar with that because I think it helps us better understand what we're dealing with right now. It's just a sticky, low volume environment, right? Even off great NVIDIA earnings, okay, where a lot of things have already pushed to the upside and likely could use a period of time of where they chill and catch their breath. Okay. And, as far as today, even off today, where we get finally a little bit of weakness in the overall market in certain pockets that needed it, the flow is still, in my opinion, signaling just that, right? It's very selective. We just see a couple names on the top bet list. Even that action is not too excitable. And the signal from sweeper activity right now has been to, if you're going to trade, try to stay extremely nimble and be patient and wait for better setups at some point somewhere. Okay, so that's the signal from sweeper activity. I think again the GameStop 2 week little rip there and those type of names kind of prolonged what we were dealing with anyway, and it doesn't really take a whole lot to get through this, especially in bullish of times. All right. That being said, as far as backdrop is concerned, you are going to have, right, some of the sentiment and positioning signals out there are going to be a lot more bullish, obviously, with a market coming off a rip and at new highs. But some of the big picture signals that we pay attention to are still in really good shape. Okay. Might as well just look at these. I have them up here. This is like the surveys that come out every week, right? And you dip down from a high reading of 50 the end of March down into the low 30s. And now you're approaching, again, this was coming into the week, you're approaching that 50 range again. Okay. That's not including today's washout. This is the NAAIM exposure. The blue line here is the one to pay attention to. And again, just top of the range, what you would expect off a market that's rallied the way it has. Okay. But here are some of the stuff we pay more attention to when we go over here. These are credit default swaps, right? So some of the signals we look at from the credit markets, we've been seeing a little divergence. Again, not major divergence, not any crash signals, but we've been seeing a little divergence from some of the things we look at to signal when there's a higher probability or the possibility of some sort of rinse coming, right? We talked about it. If you remember, we talked about it here. If you guys were on the webinar back in March, okay, you had, even though the market continued to grind higher, you started to get credit default swaps slowly widen out. Okay. And one of two things happen. Either you get a quick rinse in the market and that divergence gets undone quickly, or it continues and can lead to a little more of a shakeout or a correction. Okay. And you can see here, this is before today's rinse. You see it's starting to curl down here as the market still making new highs. But there's one thing I want to point out to you guys. I mentioned to you guys in the steam room today that it's kind of a little misleading about this divergence. The same thing here, okay, VVIX, right? In simple terms, this is the vol of vol, and you want to look at that as an appetite for people to put on hedges, right? So if you see VVIX starting to move higher, that means people are starting to gain an appetite to put on protection and hedge. And again, right, you had NVIDIA, a big number, market opened up at new highs, right? Early on this morning, but coming into today, you could see the same thing here, right? VVIX already starting to curl and diverging from the S&P 500. But was it really diverging from the S&P 500? Because when you look at the equal weight S&P 500, each of those 500 names equally weighted, not reliant on the NVIDIAs of the world, we weren't making new highs. We were already breathing for the last week in terms of the real market out there, the overall market. You understand what I'm saying? So even though there was a divergence from SPY, right, which is heavily weighted on the big mega cap names that have led this rally, in the overall market, the truer version of the market, there really wasn't much of a divergence. It was kind of, our signals were lining up with what the real market was showing anyway. So something just to point out here, wasn't, again, as big as a divergence from our credit signals and VVIX as you might think initially, right? RSP was kind of showing a little bit of tiredness or weakness off that niner already. Where I'll give you an example. Look at like ES, or let's say even SPY or SPX, right? You literally had a new high this morning, or even ES. I think you had a couple of days. Yeah, you were poking to new highs. So you weren't really seeing much of any breather per se. All right. Some of the other stuff we look at, still quiet. Again, not signaling any problem. Sharpies. This is just in the S&P 500. You have them literally at the zero line, so they are flat. And hedge funds, which have for a week dipped their beak on the long side, they are pretty much flat as well now. So nothing going on here. Okay, nothing going on here. Again, a signal of potential caution would be if that green line starts to really creep up on the long side. That signals hedge funds are getting aggressive, putting on exposure, chasing this move, okay, which they haven't done at all, literally since the start of the bear market in 2022, as you can see here, okay. Sharpies, which are commercial hedgers, they are taking the other side of that bet. And you can see here recently, as hedge funds were covering shorts, Sharpies were taking off hedges. But that kind of stalled here right now for the time being, okay, as of last week. So nothing really going on there, right? And if you're looking for that signal that everybody's in the pool or this is a bubble that everybody's all in, well, hedge funds aren't all in. They're not in futures. And here, which we look at every week in the individual names, they are pretty aggressively short in individual names again, right? Again, people have different explanations for this, right? Oh, they probably reshorted the GameStop and some of the heavily shorted names again, whatever it may be, okay? But they are net short in single names and not net long. All right, and not even close to any net long to a major extreme here. Okay, this is the zero line here. So yeah, the takeaway is there's been that added bid especially off pullbacks in this market, because they are more inclined to cover shorts into weakness or add long exposure, as you see they have done throughout this whole rally here. Okay, if they are long, especially aggressively long, and the market pulls back for whatever reason, and they sell into that pullback, that's what creates even a deeper correction. Okay, so again, that would be in the not even the neutral column. Hedge funds and single names, that goes into the bullish column. Okay, these are just, again, some of the big picture stuff we look at. On a short-term basis, again, we had heat. You don't need sentiment indicators to tell you that, but this is one of them that we look at, the short-term composite indicator. Over 70 is a caution signal. Over 80, you're getting a pullback right around the corner. And you can see we got pretty close to 80, and now we've rinsed, working our way back to the neutral mark there. Okay, so again, we looked at this last week. I just wanted to update you guys on where we're at now, and even better shape after today. And this, I think, is an added issue here that is net bullish, but it's not as bullish as you would think, especially for the type of traders we are, right? You got gamma up at elevated levels again, okay? And the way market makers hedge that, what they do is when a market dips, they buy to hedge. When a market pushes higher, they sell to hedge. Okay? The bulls will always focus on the dip buying part, and the bears, may focus on the other end. But in reality, what it creates is a really sticky environment. Okay? For the most part, right? A lot of times you need something to enter the mix to really crack that sticky environment. It's the possibility of that happen. It's happened before. It's not impossible to happen. But aside from news that really cracks that gamma environment, you get price action that you almost get a lull in the price action. Right? You get a lull in the price action. Like a day like today, I mean, that's actually pretty decent movement with gamma up at these levels. Okay. If you're a bear, the way you would look at it as that, the price action up here is sticky to the upside. And if you do get something to crack this, you can get some decent downside as gamma goes from elevated levels to now possibly negative territory. All right. But that's a big if. That's a big if. And a lot of times where the bears get frustrated is you get a sell off and it looks like it's going to follow through. A lot of the stocks under the hood look like absolute shit. And then all of a sudden you get these intraday rallies that come out of nowhere, and you get squeezed. Right? That's usually what happens in these type of environments. So it makes it really difficult. But in general, I think it just makes it a difficult environment to trade, period, because of the sticky nature. Like, even look at today, right? Forget what the indexes did today. You had NVIDIA come out with another blowout quarter, right? So NVIDIA gapped up. It took a lot of the semis up with it, okay? But even if you looked at the internals when you came in this morning, everything looked like shit. Everything looked like shit under the hood, right? The internals were awful. And, like, for example, you had the equal weight S&P 500 as the S&P was at its highs, actually down over 0.5% on the morning, and you could see it if you pull up an intraday chart. So you get these climates where you feel like you need to be bullish, right? And you force yourself to be bullish, but the price action in a lot of things just is shitty, plain and simple. All right, so here's the equal weight S&P 500 off the open. All right, so unlike the rest of the market, which gapped up, this went lower, stabilized a bit, and then rolled over with everything else into the afternoon. You know? So yeah, I like to look. You can. Here's the problem with looking at this equally weighted S&P 500 as any sort of indicator, and it's not a great one, especially over the short term. You can get markets plenty of times, okay, where some of the biggest companies out there, the heavily weighted companies, hold SPY up and it continues higher, and you really don't gain much traction out of the whole universe of the S&P 500. Okay, I think again the problem with that is when you're looking for new ideas or other ideas, they're not there. Right, the constructive pricing is just not there. And the beauty of it, I think, again, I'm biased, but sweeper activity is usually the sweeper activity is going to tell you exactly that. That, things, the indexes look bullish to the naked eye out there, but in reality, there's not a whole lot of bullish behind it, right? So when I see the RSP, the equal weight S&P 500, not participating, that usually is a good indication for my style, that there's not going to be a whole lot to play. Like where some of the best and cleanest sweeper activity, the most aggressive activity on the long side show up is when the equal weight S&P 500 is participating in the rally, right? And even more so if you get the small caps and the mid caps participating in the rally, right? So the more participation you get, the better the flow, the more new ideas you're going to get. Okay, when you don't have that, it's going to be those few names. And here's the problem. Okay, think of like this morning. You don't know which end will win out over the short term. Like maybe some of you were predicting that the whole market would end up being taken down from the lack of breadth and participation, but very easily it could have been the other way around, right? The strength in Nvidia could have pulled up the semis, could have pulled up an Apple, and then pull up the rest of the market off the lows. So there really is no, there's no way to try to predict, especially on a short term basis, of how that's going to shake out. At least in my eyes, you know. Again, I'm without relying on sweeper activity. If we are dealing with that environment and sweepers are coming in and start bombing names, okay, that's our edge, right? That's our clue that the big guys are going to pull up the rest of the market. But if there's a lack of call buying, right, that's the information that tells us that either it will remain the same or be taken to the downside. So again, that's what we're dealing with, and to me, that's an issue. And in my opinion, we want to try to be patient and get through this. Right? That's a, that's my opinion. For the rest of FinTwit out there, they'll probably be talking about the same the same five tech names over and over and over again, and not give a rat's ass of what I just said. But for the majority of us that are looking towards the rest of the market and new ideas and not chasing names that we just sold a week ago at higher levels, you kind of want to let things shake out here, get through this, however it resolves, and deal with much cleaner action. Does that make sense? You know, so again, there's nothing extremely bearish about what we're seeing right now. I think the backdrop is still bullish, but on a short term time frame here, the signals are telling us to chill out and let things play out for a bit. I guess that's the best way to put it. You know, that's the best way to put it. That being said, let me share with you guys quickly some of the top action on the day. There's not much, so we can rattle through it quickly. See what you guys think of some of these names. One name in particular, we've been talking about a lot in the Steam room. Let me just post it and then I'll repost it. We've been talking a lot about in the Steam room based off the action it sees. Okay. And then we'll shoot the shit about some other stuff, names and stuff, and then I gotta run. All right, so here is what happened. Oh, come on, what do I gotta refresh? Here are the top bets on the day. And by the way, we didn't look at this chart. This tells you a lot here too. All right. So these are passive flows and these are active flows. All right. And these passive flows that just keep coming in the market, right? They go into these ETFs and these ETFs continue to buy the big guys. Right. So there's a lot of mechanics behind what we're seeing, especially in this bull market. Another thing too is the buybacks. All right, these buybacks are just insane right now. So a lot of these larger companies have been benefiting because of these huge buybacks. Even though Jamie Dimon says that he's not buying back his stock up here, kind of got the banks a little bit nervous, the sector, I should say. All right, here are some of the names from today. This PDD I put on the top bet list today. It's obviously not a new idea. Anybody who's in the steam room is well aware of this. Okay, the action that this name catches is incredible. Okay, Nvidia is going to catch $2-3 million sweeps like it's nothing. Okay, Apple, Tesla, these things trade more than the indexes these days. Okay, but this PDD is not as active. Okay, it's been pretty active for a while now, but nowhere near the Nvidias or Teslas of the world. You got some big boys in this stock, big boys or girls. Okay, but you got some players in this thing. August 160s. Okay, this is now post earnings. By the way, we saw, I think it was like a $20 million bet pre earnings. Okay, a couple weeks before earnings. I think it was at when the stock was 120. Okay, now the stock is 150, and still the size is outrageous. Here's call it a $10 million sweep, August 160s. Here's an $8 million sweep, October 160s. Here's another $4 million, October 160s. So whatever funds and institutions are behind this thing of recent, they're pretty gassed up. They're pretty gassed up. Okay. And, we saw some nice size last year as well. So it's not like this thing used to catch $50,000 sweeps and now it catches multi-million. This thing has a reputation now for at least a couple years of decent size. It catches size. So in other words, if you see $100,000 sweep, it means nothing to this name. Okay, but they've been committed, and we talk about it all the time. They were positioning in size pre-earnings. They're coming back post-earnings. I think the knock here is that when you're seeing action at 120 and the stock is north of 150 now, it becomes a little harder to buy, right? 30 points higher than where it was. But again, you can get pullbacks, you can get consolidation, you can get, constructive bullish price action when it settles down. That, especially if you see them come back, is something to keep on your screens. Okay. And listen, the China stocks, I have very little interest in, just because of China itself, right? You could walk into some news tomorrow and these China stocks can go bidless. Okay. You may think I'm exaggerating, but it's a possibility. Okay. All these China issues come with extremely high risk. So my recommendation would be you play it through options instead of equity, my opinion, and you risk your premium. Okay? Doesn't necessarily have to happen while you're in it. Okay? But if you get looking coffeeed, as we like to say, and you're in it in a decent way, you're not coming back from that. You know what I mean? At least if you're in calls and you're risking what you put in those calls, that's the best way to manage your risk, period, regardless of what stock you're buying. Okay. So that disclaimer being said, um, it's really good looking. It's really good looking. So again, this is not recent news. It's probably out there publicly. Their numbers, are solid if you believe them. Crazy growth, and a couple buddies I know who are really bullish on the stock have been telling me this is like a hidden AI play within the fund community. They're looking at it as an AI play, right? In that particular sector. Yeah, and Tepper is in it as well. So you got some big boys in it. So again, you could take advantage when and if you see dips, and you're likely going to see a dip and a breather. It's something to keep on your screen if you're interested, and look for entries, you know, in that way, right? Unless you really like it and you're buying calls with time, risking whatever you put in, and you just like it here because it's breaking out as we speak, right? But this looks good. There's nothing. If this was an American company, right? There's not a mark on it. There's not a negative point on it. I think the knock is China, and I'm not being, I got nothing against the Chinese people or anything like that. It's just, these Chinese stocks are really dangerous. You know, um, you don't even know if these numbers, right, are legit. We have no idea. Right? I mean, Luckin Coffee was making coffee cups and throwing them in the backyard, saying they were selling them, cooking the books. And by the way, they came public again, Luckin Coffee. By the way, they're back again after that CEO cooked the books years ago. So there was nothing really wrong with the company. It was just a shyster. Right. If you're not, if I didn't caution you enough, I'll give you Ronchero's phone number and you can call him up and he'll let you have it in regards to Chinese stock. Well said, Adrian. Well said. But again, this is one of the few, like, for example, okay, like I get it. Baba is, oh my God, what is it? Is down a lot. There may be value there, blah, blah, blah. To me, like, this is a hockey stick, okay? And Chinese, I want nothing to do with this. You're asking for an ulcer, okay? Buying this. Where if you're looking for exposure to China and growth, I think this is the perfect name for that. The perfect name. You don't have to deal with the bag holders that are in the Babas in the world, the Baidus of the world. You're getting to a point here. You cleared a lot of this mess now, and the fundamentals are there. You know, the numbers are there. Like this, it's no joke. All right. So again, you have the size, the flow. It's been there. They've been supporting dips. And here again today, they could be pushing out some of that pre-earning stuff, right? But still, a lot of good-looking action there. Aside from that, there really wasn't anything too exciting out there. DT, this is an underbelly software name. They are profitable. I know this name well. Those of you in the steam room with me over the years, we made actually really good money on this stock back in the day. It was probably over here. I think it was pre-COVID when it first started to catch sweeper activity. Has been quiet for a while now. Like most of these high multiple software names. But you got a little bit. I mean, I would call this nibbling in this name. This is not huge. What is it? Maybe a couple $100,000? Yeah, 200,000. It's not that bad size wise. But you got a little bit of nibbling in this name. Okay. Technically, again, it's been dealing with a lot of problems like these high multiple stocks have, but you're not overextended here. They reported numbers. They are profitable, so Again, I think it's more of a name to keep on radar and see if they come after it, type of thing. A day like today with the flow we were seeing, this caught my eye because there was just not a lot of buying out there. Okay. This NCLH, I mean, I got an excuse for all these things. That's when the flow is not exciting me. My philosophy on these cruise lines have been anytime you see some flow in NCLH or CCL, throw it in the garbage and just buy RCL. That's the stud of the group, right? That's the stud cruise line that catches the stud action flow wise. The other ones, NCLH, CCL, I don't know the reason why, but it catches a lot of speculative activity. It always catches this cheap, out of the money call buying. Again, I don't know the reason why. Okay. So you had some action today where it went further out in time. They bought the December 21 calls, but again, same type of action, right? Like you look at the PDD action, okay, or you look even at the DT action, right? They're laying some wood premium wise. They went $6 out of the money here, December's. Yeah, they took the cheap way out. So it's more of a speculative bet to me. Okay. Yeah, it's not a huge amount of money. Actually, for this name, it's not even average amount of money. But on a day like today, there wasn't much of anything else out there. Okay. So that's NCLH. RCL looks great. Okay. If anything, the knock is like many things out there, it's a little too hot. But these guys, they don't look great. They look like shit. Yeah. Where's the CCO? I mean, these are, compared to Royal Caribbean, like it's night and day. Night and day. Let me get this off so we can see the chart here better. There we go. Night and day. So those are my thoughts there on the NCLH. Again, the action's really not even that noteworthy. Capital One was a decent sweep. It was just one bet, but nice size. July 140s. And that's a pretty solid name. So this Capital One's not bad if you like it. Okay? You can make the argument that going for the breakout here. Right? Similar to what we've seen in Morgan Stanley and Wells Fargo. Right? We've seen it with some of the larger big banks. But if the banks perform okay, Capital One's usually part of the studs. It's a great stock. It's a great stock. Once upon a time, I actually had it as, just a put away, tuck away investment position. I don't know why I ever sold it. I have no idea because I rarely sell those investment type positions. But unfortunately, I'm not in it anymore. But it's a good company. So if you're looking for a bank off, again, what's a little bit of a pullback today, Capital One did catch a nice looking July sweep, and it also looked like there was some September put selling there. All right, so that's probably the second best out of this list. PDD, Capital One, DT, and then NCLH, a distant last. That's it. Anybody have any questions on any of these names here before we start talking about? Tepper has a 2 million share position in PDD. I know that there are a lot of those big shots positioned in China off the last 13F. This is not China. I was going to say, here's another name that we've been seeing some action in. Asia, I think it's South Korean or whatever. It's CPNG. This is Drunkenmiller, if I'm not mistaken, right? So yeah, this is another name, retail name. They're just supposedly turning profitable. They raised prices. They got some good things going on there. This is what you're battling, the hockey stick. So the trip may not be as smooth, right? Some of the other ones we looked at that don't have the selling, but it looks good. Looks good. So what are you guys looking at? GoDaddy, is that still going? I mean, that's unbelievable, that stock. By the way, I think I mentioned it to you guys the last time we talked about it. Supposedly GoDaddy is a strong AI play. Okay? That's why did GoDaddy do this? Supposedly that is why. It's an AI play. Okay? And what's funny, you look at GoDaddy prior to that. Like, look at this. Ooh. Right? Literally from 2018 all the way up until the end of last year, you had a stock that did absolutely nothing and got shot out of a cannon here because it's considered an AI play. So yeah, GoDaddy, yeah, up here now, forget it. I don't know what to tell you up here now. How are these numbers? But look at their numbers, right? So like the stock, look at these quarters. They're doing something right. Like look down here, right? They're reporting 50 cents, 60 cents. They're profitable, okay? But they're trading at a ridiculous multiple at that point with very little, if any, growth. That's why the stock goes sideways for ages. Then all of a sudden, right, they announce or whatever they said about AI, okay? Look at these quarters now. 780? What? They went from reporting 50 cents a quarter in earnings to $7.85. $2.76. You're talking about blowout quarters. Blowout. What are they looking for this quarter? Oh, they are already reported here. This is August 1st. $1. Let's see what happens here. $1 billion for the quarter in revenue. The numbers are no joke. Numbers are no joke. So, this is kind of like the SMCI. You got the fundamentals there, but this has come a long way now. So you probably are going to have to deal with, right, something like this or something like this. That's what you're going to have to deal with at GoDaddy, likely sooner than later after this move. Can't go up like that forever. So that's the issue with GoDaddy. Neo, forget it. I have no interest in. I have no interest in the American EV plays, let alone. I got a stock to talk about with you guys. Actually, see, Khalib, that's why I love you on here. Even though you didn't even try, you trigger my memory to remember shit that we could talk about. Here's a stock that, again, is not ideal for the type of name I want to buy because, again, old EV hype, right? And then stock bag holders. But this name has been seeing some nice action, this BE. Put selling, call sweeper activity. It really came aggressively after it the past 3 days. It was yesterday, the day before yesterday, and then last week, put sellers. Had a big move here now. Maybe it rests a little bit here. and then something to keep an eye on if you like it. I instantly brushed it aside. In other words, for anything more than just short-term momentum, because I thought it was just EV or charge related, squeezing, or for whatever reason. Then GJT in the room told me that it's a power trade now, right? Like that whole AI power trade that's been going on out there. This is getting lumped into that camp, which becomes a little more interesting, right? Again, they're losing money, so the profitability is not there. Um, but again, you guys may like it, may know it. I don't, I figured I'd bring it to your attention. Interesting name. What other one? This one too. Iron. I think we talked about this name. Yeah, remember? We talked about this name. More of a speculative type power play. Bitcoin miner and database. Not database. Database? Right. Data center. This IREN. So very similar to what it's been doing. It pops and comes down, plays dead, then pops again. So let's see how it reacts. So if it was an August sweep today, but I think they were rolling out July calls. Another interesting name. And then speaking of Bitcoin, that's another one that didn't really confirm the a breakout, off this NVIDIA and Go. Has kind of had a nice rip here and is settling in. This too, if I'm not mistaken, Bitcoin had an upside niner, right? Went from niner to niner. Let's see. Hold on. I could be wrong. No, upside niner. Let's see. I don't know if you can make it out. Oh, what happened here? Here's your downside niner. Nailed the lows. And upside niner came a little bit off a little pull there. So I think Bitcoin is a nice tell on the speculative risk appetite out there, just in general for equities. And a lot of times, not always, but a lot of times it could be an early tell, which that comes in handy. I'm long Oracle. Let's see Oracle. All these big guys. Oracle. Yeah, again, same thing. Looks really good. This actually looks even better because I think you got a nice, it's been settled in for a while here. On a short-term basis, though, niner to niner, you might get a little breather. Well, short of a niner, you might get a little breather. Sometimes you get little breathers. Niners. You get little breathers. But yeah. And you're probably long Dan at a decent spot. Looks good, though. Again, fits that mega cap theme, right? Speaking of mega caps, if you remember a few webinars ago, we were talking about how, the AMDs, the NVIDIAs of the world, did SMCI, they've had their move, right? They exploded. There was money to be made there. A lot of you guys made money there, but to buy them up at highs after a move and at higher levels than where you owned them just doesn't make sense. And instead, you're better off looking at the cyclical semiconductors. Right? You remember that conversation we had? And those are names like this. NXPI, right? That just broke out. Look at this one. Off earnings the other day. ADI. Explosion here. Texas Instruments. Right? Teradyne. Look at these moves. Shot out of a cannon. shot out of a cannon. So these things probably even have more upside. They have more upside. They just, on a short term basis, they need to chill out a little bit, catch their breath. So, and listen, Nvidia is at new highs, right? So that was the stock that, all right, if you chased, right, you sat through some consolidation, you probably made a little bit of money on your calls. But think about all the other ones. Nobody ever talks about the other ones that they were touting. SMCI, if you were in calls, you lost your money. Okay? You lost your money. AMD, if you were in calls, you lost your money. Right? ASML, if you were in calls, you lost your money. Right? It doesn't have to crash for you to lose money in options. Consolidation burns all that premium away. So to find the one NVIDIA and think about what like NVIDIA had to do to get to where it got to, right? I mean, it got the whole world riled up off the past couple quarters. So I mean, that's just the logic, right? It doesn't guarantee that you were going to make money here, but the risk reward is just better, right? The risk reward is better if you're even partially right. So, again, this was a group, right, we were talking about for weeks. You can look there, for dip opportunities. There should be support. Yeah, now they more than likely need to breathe a little bit here. They need to breathe. Here's another beast, QCOM. All right, another cyclical name. Did you see the roll? Did you guys see the roll I posted on Twitter? Let me show you guys that for those of you who didn't see it. Okay, this is how these Sharpies on the sweeper side work. Okay, just so you know, because everybody, every time it catches a big sweep, you got people on Twitter, oh, a big sweep in NVIDIA again. This is how they roll. Okay. By the way, Stanton hit a. Look where this. Yeah. God damn it. Eh, People think it's a pop up to shallow center field. The ball lands in the black. What a beast. Look at this here. Where's the roll? Yeah. So they were buying those September calls initially in QCOM. That's where a lot of the heat was, all the heat. Okay. Today they closed $90 million worth of the September 160 calls in QCOM. 90 million. Okay. And they took 60 million of that 90 million and they rolled them up into the September 190s. Okay. So they closed those 160s and they rolled them into the 190s and they put 30 million in their pocket. Now, is that bullish? I mean, you can make the argument, they're still in the trade, but they're always still in the trade. That's how they catch trends. They very rarely, when they build positions like this, right? They don't just pick a spot and sell it all. Okay? They do this. And what it allows them to do is catch these trends when they keep going. But look what they did there. That's insane. 90 million bucks worth of the 160s, and they put 60 million to the 190s. But QCOM, another cyclical semi with a big breakout. Once they catch fire, boy, look at them. So yeah, they've been hot. Hymns. I mean, it's interesting. It's interesting. There's definitely been flow in the name hymns. You got now they're doing the fat drug injections, so you got the excitement off that. Very similar to the everything else out there, Tobias, where it just needed to rest, right? Same thing. Look, right? Very similar, like here. The Niners, you need a little bit of a rest. You're getting it here, so that's good. So I think if you're looking at the name, you're interested in the name, you're getting an opportunity if you like it. But yeah, it looks interesting. It looks interesting. I don't know, anything about the company itself, aside from what everybody else knows. Maybe you know something more about the company. Numbers wise, yeah, they're profitable, but not making much money. But maybe very similar to GoDaddy, you're going to start seeing that now. You know what I mean? So, and if that's the case, you got a lot more upside here. But to answer your question, the only thing I can help you out in is with flow. There's been decent flow in the name. There's been decent action in the name. And they've been pretty committed. We've seen them throughout the course of the year. So is that what, I mean, do you like the company or you just like the technicals? What do you like about it, Tobias? Like, is adding the fat injections to their arsenal, is that going to really boost the bottom line? Is that the sizzle? And like, look, you got insider buying here, right? Oh, insider sell and an insider buy. What the fuck is that about? Who's this? Insider, insider sold, insider bought. Hims and her selling copycat weight loss drugs. Yeah, I realize, I don't know much about the company. I don't know. I mean, copycat way. I don't like the way they put that. Speaking of NVO, that caught some repeat activity again a couple days ago. I posted on Twitter, September's. But it's not a new name here. Look, and have you noticed the pattern here? Right, like that's where a lot of the best action has come from. It's coming in names off little pullbacks that already have been littered with buying. Like I remember when they bought the living daylights out of this NVO. All kidding aside, okay, and that was here. All kidding aside. And that was before, if I remember correctly, well, I didn't even know about fat drugs at the time. You guys might have known, you know? But that's where I remember putting it on the top bet list multiple times. Multiple times. I just thought it was a big pharma play at the time, And now, we've seen repeat buying along the way up here off little dips, but they're little dips. So this is not new action per se. You can trade them, but to build a position up here, again, for me, it's not the type of thing I look to do. Another name like that was this name yesterday, CDNS. Caught another bet. A little better. Where are these lines coming from? It must have been me drawing these lines. You got a little bit of a pullback here, but and Sil will tell you, they do with these names all the time. Every little pullback, you see a sweep come in. So here they hit, what was it yesterday? November calls. This is a great stock. Here's another one. You guys saw me probably posting on Twitter a few weeks back. CLS. Look at this. Right? Off this little dip. Now, if you were to tell me that this move was going to look like this, yeah, I would be buying every dip, right? But it doesn't happen like this all the time. Where these moves keep going like this, these moves are crazy in these stocks. So I don't know when. I thought this thing would go into some lengthy consolidation sooner than later here. And that's not a knock on the company, guys. Again, all the best companies out there, after big moves, they consolidate or they correct. Lucci keeps. I think Lucci wants to use everybody else as a guinea pig, which is a good idea. He wants to see if people drop dead using this Ozempic, and then he'll use it. So he gasses everybody else up. That's what he's looking to do, Adrian. Which again, I think is a pretty good idea. Yeah, the Ozempic, you get nauseous, right? If you eat, people lose crazy weight though, so it works. NVAX, there's been some speculative activity there. I don't know if it's bird flu. Is it bird flu related? But, this again is not my cup of tea, this. Now, you get some bird flu hype. We were looking at the other one. BCRX. The last time there was a big bird flu scare, you guys may not even remember it. It was a while ago. Obviously before COVID. This was the one. This was the stock. NVAX was the smaller one that they went to after they came after this BCRX, but this BCRX was the stock. Like, look, if you look at like this is COVID. Here is the bird flu. No, that's not it. It's probably over here somewhere. This must be it, right? Yeah, this must be it. This is a weekly. So again, I don't NVAX. I don't know if you're playing it because of the bird flu, but I don't have much of an opinion on it. Flow wise, it's just catching speculative activity for the most part. You know what I mean? There's no aggressive positioning in it or anything like that. But the truth of the matter, guys, is not a whole lot of aggressive positioning out there, period. A lot of the miners and commodities, right? That was the hot spot. They had crazy moves, and they're breathing now. Here's Freeport, a dip buyer already yesterday, August calls. But, I think this is what you got to deal with now. Once these things hatch like this. And I think if you're in it, I wouldn't sell it. And if you want to trade it, you look to trade it off dips. But I think this is now, kind of the norm here with these things. How's the other one too? Southern Copper. Yeah, same thing. Same thing. But if you do get some digestion here, and then, for a period of time, and they come after and hit it, it may set up as a nice trade. DJT. Now that's craziness. Let me see. DJT. Yeah, I don't know. I don't know. I have no idea. There's been mixed action. There was one big put sweep. Then there was like smaller call sweeps around it. People just rolling the dice. The flow has been predominantly trading flow out there. And I think now what we've been seeing is a lot of mixed flow. You'll see, Tesla put sweepers for 2 straight days. Then one morning they'll come in and buy some calls, and it's all weeklies. But Tesla had some put action the past couple of days. You got a little weakness there. Hasn't really done much. I think that a lot of these names, flow-wise, are just cooked, guys. There's so much action in these things. You know, it's like what we were talking about a couple weeks ago. There's not much edge in these names. Like you're being naive if you think you have an edge in Tesla or Nvidia over the next guy. You know, you may have gotten lucky this time and the other guy didn't, but as far as a legitimate edge, you don't have an edge in these things. There's so many people trading these, so many funds trading these things, so many algos trading these things. I mean, Tesla these days has more activity in it than SPY. There's no edge. I hate to break it to you, but there's no edge whatsoever. No edge. Right now, you may not think you need much of an edge to play these things, and then you're entitled to your opinion. Right? Or you may not think you need an edge to get long in these things because they go up, and that could be the case for the time right now. Okay, but the goal of this game, if you're looking to hang around and make some money consistently, is to find an edge and keep playing off that edge, right? Or or just buy Shark Ninja. Again, it's just the beauty of these, newer names, man. These look at these trips. They're just I'm not going to lie to you. It's been frustrating. It's frustrating. It's frustrating. And that's why I haven't been swinging that much. I don't swing that much, especially options. I haven't calls. I haven't swung at all. Like my swings generally, for the most part, trades I'm talking about have been equity positions that I've had some cushion in off the day, and I give it an extra couple days and try to keep it tight. You know. Oh man, he's guessing it now, Seal. Oh, that's the test. That's the test, Seal. That's the test. But that to your point, Seal, that's the beauty of these names. Like nobody knows about them, especially like when they catch sweeps. Nobody knows they exist. Nobody wants to play them. Nobody cares about them. And then they start catching flow and they start attracting eyeballs. And then you get guys like that touted at $75 when you were playing it at 30. That's the beauty of it. That's the beauty of it. But I tell you, I'm not gonna. It's been really frustrating to me. Really frustrating, because again, here's the most frustrating part for me. If signals were bearish, okay, and the market's bucking the trend, and the reason it's bucking the trend is because the Nvidias of the world are propping up the market, that wouldn't frustrate me. I'm not gonna lie, because the signals aren't there anyway. You know what I mean? So it's not going to piss me off if I'm not participating as much if the signals are signaling that it's not a risk-on environment and I shouldn't be getting long anyway. The more frustrating thing about this is that the backdrop, everything has signaled bullish, risk on, and new bull market, and there's a lack of new names participating. Adrian, I think you can buy dips, okay, if you're looking for trades. But if you're looking for that breakout, I don't know. You probably need rate cuts. And you see, every time rate cuts get priced in, the Russell catches a bid. Every time rate cuts get priced out, it loses steam, tops out, and retraces every time. You know, small caps, what the Fed has done hurts the small caps. No doubt about it. Now, it was supposed to eventually have an effect on everything else. We haven't seen that part yet. Maybe we don't see it at all. But small caps are really, they got their back up against the wall when you have a tightening cycle like we have. Okay, so maybe there, a lot of people, and I'm holding out hope, think that their time will come once the Fed cuts rates, you know? But it's, it's tough. They priced out yesterday off the minutes, and I think a little bit more today. The Fed minutes yesterday came a lot hawkish than people were expecting. You had a few Fed members yesterday in the minutes, Sahil, talk about financial conditions being too easy, and they may need to consider a hike. That's what kind of spooked the market yesterday. If you remember, the market retraced and pulled back off the Fed minutes, and then Nvidia bailed it out, and everybody forgot about the Fed minutes. I mean, Adrian, it's going to happen at some point. It's going to happen at some point. The question is when. You know what I mean? The question is when. The question is when. And the risk, I think the risk becomes the economy slows and the Fed can't cut rates because inflation's sticky. And then you got small caps are stuck. That's your risk, Adrian. And depending on how the economy slows will ultimately determine how much small caps get hit or if they just remain in this chop they've been in. It's been more chop. But, I think you could still buy pullbacks in it. Like we've been seeing here, you could buy pullbacks because what ultimately will kill them is if the Fed has to hike again. And, that's hard to see. Yeah, the Fed minutes are delayed information. So, but that's kind of where the cuts got priced out. I don't think anybody believes in Sahil about hiking. And then today, to your point, was the PMI? I think the PMI came in a little stronger. Let me tell you something. There's a lot of confusion, and you just turn on Bloomberg or CNBC, you hear it all the time. Okay, out of one mouth, you hear that the Fed has to stay higher for longer, and then out of the other mouth, like today with Gunlock, who's saying he sees recession already. You know what I mean? So that's what it's creating a lot of confusion in the market right now. Yeah, I don't see. That's it. Sahil, we've talked about that. They would need runaway inflation to hike, right? I mean, come on. In an election year, ideally they wanted to cut, but the closer we get to election, Powell himself ideally would like to just do nothing. I'm sure Biden wants a cut. But you're getting that tug of war right now where, I don't think anybody has a clue what the hell's going on. You got Yardini talking about the roaring 20s. Think about that. Okay? He's talking about the roaring 20s. And then you got Gunlock who comes out today and says he already sees a recession and buy TLT. Right? So that might have weighed on equities too this afternoon. No, nobody has a clue. Nobody knows how any of this shit's going to shake out. Nobody. Trust me when I tell you, nobody Here on this webinar, nobody on TV, nobody. Nobody. You're right, though, Phil. You know, and that's who pays the price, though, right? When we talk about the market and we're talking about these big buybacks and we're talking about Nvidia, the regular guy out there is the one who feels the pain. You know, now how much pain do they have to endure before you start to see consumers pull back? Right? It's been mostly the the upper middle class and the wealthy haven't really been affected. It's been right the lower middle class and the poor who have been affected. But when that upper class starts to feel the effects and they rein it in, that's when you get the slowdown, right? Especially with jobs and shit like that. All I know is I saw the new update of AI. I showed you guys the clip in the steam room today. I don't know how there's use for humanity anymore. Period. Okay, what use does human have at all? I saw the new version, the what's it called? The GPT-4, whatever the fuck it is. Okay, and pass that test whether you could determine whether it's a human or not. I There is no way I could tell if that AI version is human or not. No, no way. I I told you that one. There's one clip where it's teaching the kid the math. Right? I think I have it here. You guys probably saw it already. But to me, I'm tech illiterate. I mean, I can't. Who I don't understand the purpose of humanity anymore. This here, look, listen to this. They got they got their own yeah. Who teaches anymore? Now watch this. This is the one that I got a kick out of. Okay, she laughs. Would you be able to tell that was an AI? Oh, you can't hear it? Oh man. Hold on, I'll put the link in the room. That sucks. Yeah, it's pretty crazy. Here's the link, and then you can find the rest of the thread. Unbelievable. It's pretty sick. It's really like she's cracking jokes and giggling off his joke. It's like talking to a regular human being. I mean, crazy stuff. This one here is translating. She's sitting there and talking in Italian, and the AI is translating. They're going back and forth, translating in two different languages. It's insane, insane. Again, you guys are probably familiar with it, you know, but it, it blew my mind. It blew my mind. Just it's one thing to ask AI questions and shit. That I found cool and useful, but they speak to you like they're it's not even a bot, like it's a human being. He's cracking jokes, she's giggling, she's joking to him. Insane. It is awesome. I think I finally he said, I finally got it finally dawned on me now, the hype behind this artificial intelligence shit. I think I finally got it. Ay, ay, ay. It is, Khalib. I'm not gonna lie. I'm telling like if you're a teacher, you got to feel threatened. Like right there is just, I mean, who, especially now, more kids are being homeschooled. I don't, and each and every update, it becomes crazier and crazier. All right, soon you're gonna have a walking bot, Khalid, walking around your house with this AI brain, and what the hell you need a human for? Yeah, you think the GameStop? Well, listen, Adrian, it's always a trap. Always a trap. I mean, it depends on your definition of a trap. The first time, and I don't think it has the juice from the first time, but look what happened the first time. You had this big move, you had it crash, and then you had this. And this was like 8 to 90. And then it crashed after that. Well, went dead, I should say. And then here, you know? So I think that's the question here. Like, do you get, after this crash, you get it settled and then another move? Like right now, okay, and you guys know, right? Again, not to beat the dead horse, but the GameStop sweeps, right here in the Steam room, that's where we were playing them off of. I have no interest in the GameStop flow right now. You know, there, when nobody is paying attention and you're seeing aggressive sweeper buying, that's when you pay attention. Here, this thing trades more flow than it ever traded down here, but you're not getting clean activity here. Today you had a ton of closing activity. So it's kind of like with the big names, right? The more action you have in them, the more players you have playing in them, the less of an edge you have. So like I just, again, as much as I had an interest there, I have no interest in GameStop at all right now. Zero. Nothing. Now if it goes dead, for a month and the flow dries up, and then all of a sudden we see aggressive GameStop sweeper buying come in again, I'm probably gonna play it. But right now, no interest. And AMC, I'd even play it when they were hot and it caught some action. I mean, I wish I did, but that too, zero interest. But again, these, and this is the point we keep going over, right? These things you may get a period of time where they squeeze, right? But there are no fundamentals there. There's nothing there. This is just short covering. Ultimately, this is a fucking piece of dog shit. I cussed. This is a piece of dog poop. A piece of dog poop. This is not the stuff. What the apes do in these things, this is the last place you want to have diamond hands and take that approach. Okay? The last place. If you're going to have diamond hands and believe and hold on, you want to do it with a real company that has numbers and growth. Not because every other monkey's doing it. I mean, the complete opposite of what they should be doing, they do. First Solar, I know it's had a big move here. Ideally, if it can hang out a little bit here, this doesn't look too bad. And I wouldn't buy or look at another solar stock at all. This is the only one I would look at is First Solar in play. The only one. The numbers are there. Everything's there. The other solar stocks, I couldn't care less. But yeah, here too, you got a big breakout, right? Big breakout. Supposedly they benefit off the tariffs. So what you want to see is you want to see something like this, right? Off that move. That's what you kind of want to see here. And then maybe you make a play for that. Monster. Big day. Big couple days there. But, again, you got the numbers there. You got the fundamentals there. You got it all there. So, this thing just broke out. It was a big breakout, though. It was a big breakout. Even if you get something similar to this, you see over here, back here, see here, when it got extended, see this little shake and bake right here? And believe it or not, that was almost a downside niner there, see? And then, pew! So, I'm glad you brought that up because this does look interesting, even with the move. And that's the difference of the market. You got this, and then the crap like this: SunPower, Run. Look at this disaster. Okay, these are solar names. Sedge. You remember this Sedge? Look at this. Oh my God! Nice, Sahil. Yeah, you may get lucky with that, and you know what I mean. Off this breakout. Get really paid. Look at this Sedge. Look at the complete opposite of First Solar. Like all the other solar names are abysmal, and you had a big move in the ETF too. Look, here was the big move, and you scroll back. Look at this debacle. So the only one is First Solar that I would even look at. The rest of them are, oof, they're tough. But I like First Solar. I like it. All right, what else? Anybody else have any other names to add? I mean, the power names are still red hot. I think this one finally pulled back a little. Amphenol, what a move. Oh my God. Look at this move. Look at this. Right? Here's your little breather off the break. And come on. I would have never have thought a move like that was coming. Yeah, these are not, again, they're not, these are, I don't know, blue chip names, I guess is the category to put them in. They're all, do billions in revenue. Like what they do, 3 billion for the quarter, profitable names, but this AI power theme that's going on out there. All the utility names have been lifted. There's VST. What's another name that I'm interested in. If it catches action with time, I'm gonna play it. DD. They did that spin-off similar to GE. They're gonna split up into three companies. And you guys know how that benefited GE. Look at this. Look. Oh my lord. Coin, yeah. These Bitcoin plays look good. They look good. You know, I don't follow coin as closely as I follow the other ones, but I mean they look good. You know, very similar here. They just, had a big move and likely digestion, right? You had it here, you had it here, and you got it here, right? Um, the problem similar to like the gold plays. Bitcoin ultimately, the price of Bitcoin is going to determine how these things do, right? If Bitcoin goes into crash mode and corrects, in all likelihood, these are coming down with it. If Bitcoin rips to new highs, in all likelihood, these things are going along for the ride. So that's the issue, right? You can't, unfortunately, maybe coin becomes this, but unfortunately, right now, you got to handicap Bitcoin. You got to pay attention to Bitcoin, and that's ultimately what you're making a play on. And honestly, maybe you rather play Bitcoin now that you have the ETFs, right? You can buy something like this, BITX, where if Bitcoin moves higher, you're definitely going to get paid. Okay. With the miners, you don't know that for sure. We just saw that with the halving, remember? So that's the issue. That's the problem. But I like, well, they lifted a little bit, but what I liked about the miners is I like the spots, like even coin. I like that it's digested here and you're not chasing it. So if you're going to play it, I like your risk reward there a lot better. Even like this, okay, the Mara. Like, you're coming off a nice spot here, right? Where in the past, if you were going to play these things, even if you were early, if you had some time, you get bailed out if the run shows up. So that's what I like about them right now. This one I like, CLSK. I day traded it, not today, yesterday. Was it yesterday? It might have been yesterday. Yesterday? What's today? Thursday, right? I don't know what day it was. But anyway, I like the spots on these things. Like when these things catch action and they're down or like off a little pullback a couple days, like let's say CLSK catches action here, sweeper activity, that's where I like to play it, because for me, like the sweepers, the edge it provides is that you get momentum and you get these pops. So even if you're not swinging them, right, you can flip them into those pops if they show up. If they don't, you have a stop loss and you get stopped out on playing the equity. So that's the way I've been treating them. But I do like the spots in general on these things. You're going to need, I think at the least, you need Bitcoin to stay in this range here. Here, like to the point I just made, Bitcoin, right? You had that downside niner and you had a nice rip here to an upside niner, right? Where coin, you kind of didn't really get much of a rip. Well, you could say a little bit, I guess. So you were better off playing Bitcoin if you liked it. That's the point, I think these Bitcoin miners were a proxy play on Bitcoin, but now you have Bitcoin ETFs, right? So guys like me, who we're not going out and buying coins, digital coins. You know what I mean? The only way I'm going to play Bitcoin is through an ETF or the miners. So now where I used to play the miners, now I can play the ETF if I'm interested. That's what a lot of these names were. Oh, I'm sure. I'm sure. You know, I'm sure you do. But if Bitcoin does its thing, if Bitcoin rips, you know, more than not, the miners are going to rip with it. They may lag at times, but they'll rip with it. But if you're making a play on Bitcoin, you're better off now playing the ETFs. Yeah, they're brand new, brand new. Like this one. Again, I don't know about the options, but if you're playing the ETF itself, this one's not bad. BITX. This is the 2-time levered. But I think this one, you got this one that trades liquidity wise options. Bito. I think Lucci said that these aren't as liquid yet, but I'm sure the liquidity will improve. But if you like to play this stuff, there's some decent movement there. Some decent movement. And the moral of the story here to end the webinar, I think that's we're more in a trader's market here, right? Until we let things settle out a little bit, and I think already under the hood, we're already getting pullbacks and digestion in different spots. It's already been underway even prior to today. Something will set up out of this, whether it's the whole market coming in a bit, needing to rinse and then setting up again. There'll be a cleaner setup out there. Right now, it's a little messy. And that's totally normal when everything gets overheated and you get upside niners across the board like we have. You had it upside niner exhaustion signals literally across the board, from banks to commodities to miners to tech to across the board. So even if you don't get a pullback off that, you get sloppy action, really sloppy. Yeah, no doubt, Sahil. No doubt. No doubt. You wanted this, right? You wanted a day like this as opposed to just that sticky price action that appears more bullish than it actually is. Yep. You're right. All right. So let's see. Hopefully, by those of you who aren't Steam Room members, next Thursday, maybe things will loosen up a bit and there'll be a pocket in the market to talk about, that is looking interesting. Right now, stay nimble, stay selective, try not to chase, and, we'll see how things shake out. All right. Have a good day, everybody. Tomorrow's Friday already. These weeks like this. Good luck tomorrow, and we'll see what's cooking. We got a long holiday weekend too. Don't forget, Monday the casino's closed, so that's another thing that's been quiet this week. Monday market closed because of the holiday. All right, so whoever I don't speak to, have a good holiday weekend. Stay safe. The rest of you, 3-day weekend. The rest of you, I'll see you mañana in the Steam Room. Have a good night.